of the big earnings results out today, one of the biggest, Wesfarmers. It owns Bunnings, Kmart and Officeworks, along with a chemicals division and a pharmacies business as well. The company's annual revenue, $45.7 billion, was up 3.4%. Net profit, excluding one-off items, gained 3.8% to $2.7 billion. Its full-year dividend, $2.06 a share, up 8 cents. On top of that, there's a special dividend of $1.50 a share. But the most important number to Wesfarmers is its return on equity, 31.2%, which I've got to tell you is extraordinary for this style of business. And something else, Wesfarmers said its chairman and former managing director, Michael Chaney, you can see him here, will be succeeded next year by this man, the former BHP chairman, Ken McKenzie. Shares in Wesfarmers at one point were higher, but eventually they settled. They did close up by around 0.4%. A little earlier, I spoke with the Wesfarmers chief executive, Rob Scott.
Well, Ross, I feel it was a pretty solid result for the year. Generally pleased with performance, but there's still a lot to do. Importantly, what you cannot see within the result is the extent of change, investment and work that we're doing behind the scenes to set Wesfarmers up for the next phase of growth. So although our businesses are performing pretty well, what I'm really focused on is how we're going to get the next chapter of growth through not only the ongoing performance of Kmart and Bunnings and Officeworks and so forth, but new opportunities such as lithium, healthcare, retail media and Anco Global as part of Kmart.
Okay, so does that mean that there's efficiencies that you can see driven through all of those businesses? And I presume that also means that there's artificial intelligence that you're going to incorporate into these businesses that will give you greater productivity and therefore a better return.
Well, productivity and efficiency is just such a powerful driver. First of all, it allows us to invest even more in our customer offer. So quite simply, Kmart and Bunnings and Officeworks couldn't offer everyday low prices without the efficiencies that we drive in our business, but it also creates the capacity for us to leverage those capabilities in other areas. So the investment that we've made in highly efficient, unique products within Kmart has now created the opportunity to sell those products internationally. The efficiency we have running chemical plants in Western Australia has created the opportunity to invest in a value-added lithium hydroxide refinery. So efficiency, productivity is so crucial to future growth and success.
But you and I both know that Australia's productivity has gone backwards over a period of time. Yet your business can find productivity where the nation as a whole cannot. What's the difference there, do you think?
Well, look, it's interesting. I think some of the challenges that business faces around productivity are the same problems that our nation faces. So businesses like ours, we have to work really hard to ensure that we remain focused on the things that matter, reduce the clutter, accelerate the time it takes to get things done. And one of the challenges in Australia is, I think, some of the federation challenges. It's a strong part of our national identity, but it can also hold us back. So I was pleased to hear the desire from the Economic Roundtable to face into the regulatory burden and complexity. So it was pleasing to hear that, but I think all the states are going to have to step up to work very closely with the Commonwealth Government if we are serious about decluttering, reducing red tape, and just making it easier for businesses to invest and operate in Australia.
You're about to get a chairman in Ken McKenzie at BHP who has been fairly pragmatic, that board, over a long period of time about whether it invests in Australia or whether it invests overseas. I just wonder about Wesfarmers itself, which is largely a domestic business but can find these extraordinary rates of return, but whether many other businesses that you would understand only too full well are choosing to invest, especially in the United States where they've got bigger markets and also better rates of return. Is that something that you contemplate at all?
Well, look, it is disappointing when I look at a lot of our resources customers. So we provide a lot of critical ingredients to the big Australian resource companies, and it's I must admit I feel there's a regret that they seem to be investing more offshore than in Australia. But I can understand that when you look at the comparative tax systems and the different timetable it takes to get approvals. In Wesfarmers, at least, we're deeply committed to Australia. It is hard to navigate some of the investment complexities. it is also frustrating where some of our tax structures create a competitive disadvantage of being based in Australia versus being based internationally. But look, I think we are very keen to control the controllables, face into the opportunities we have. And as you said earlier, I think some of these opportunities with technology and generative AI hopefully will give us the ability to actually drive productivity within our own control rather than necessarily wait around for things to get better.
And look, I've got to ask you about one thing because it's gained a lot of publicity with a lot of the retail results during this reporting season, and that is Victoria and theft inside retail stores. You've sort of highlighted this again today. Is it that unique that it needs to be called out, or is it really that Victoria is somehow different to every other state?
Well, I think the fact that so many retail CEOs are calling this out highlights the significance of the issue. It's not uniquely a Victorian issue, it is a national issue, but we are seeing that Victoria is a bit of a hotspot for this. Why we are calling it out, frankly, it has nothing at all to do with our profit and loss. It starts with the safety of our team and the safety of our customers. That is what we are most concerned about. And there are learnings we can take across states. There are different legislative approaches. There's different responses from a technology point of view that could reduce the incidence of retail crime and therefore make our stores much safer places to work and shop. So it is a real issue. And ultimately, it's one of these examples of who pays for this. Unfortunately, it's consumers that pay for the higher prices of goods as a result of all of this crime.
I'll tell you what, Rob Scott, it's always good to have you in the program, and many thanks for your time today.
Thanks very much, Ross.